Tom Keene On Demand, presenting a bonus premium podcast, only available to subscribers.
Hi, everybody. Tom Keene. Time for a weekly research review. Coming back from Davos on the airplane and coming into our world headquarters here on a Monday, looking at the research, not as frenzied as it was a week ago, but still a lot of good work put out. Let me mention one note, and then I want to get to the pick of the week right away. Hans-Günter Rediger at BNP Paribas reaffirming a number of sells on the British pound. Just amazing. And this is something we saw across a lot of the literature this week. Real caution on the state of pound sterling. Günter Rediger looking for a 157.10. That's off a 160 level for pound. That's stronger dollar, weaker British sterling. And in the research note, roadmap to sterling weakness. Hans-Günter Rediger suggesting that's one trade to play among the majors. Looking also for euro weakness, looking for yen weakness, and within the summation of that, some dollar strength. The most outrageous call there, though, without question, just talk about speed. 10 big figures in euro yen down to 120. That's a decidedly stronger yen, weaker euro. That from Hans-Günter Rediger of BNP Paribas. It's a chart, folks. Deflationary expectations, pickup speed in Japan. It is just jaw-dropping to see a survey of respondents on price decline in Japan. This from Avery Shenfield and CIBC in Toronto. Deflating the recovery, just the immense challenges Japan faces as deflation really comes in, really entrenches in Japan. That is our research pick of the week, not so much the short paragraph from Avery Shenfield, but the idea of the chart, which really shows a major sea change move since the beginning of 2008. Speaking of disinflation, Neil Sauce was on Bloomberg Surveillance. His views on inflation buttressing up with, lining up rather with Dominic Constam over in fixed income at Credit Suisse, talking about subdued core inflation into next year under 1%. You really wonder how the Fed will respond if they see, the core inflator or the PCE deflator go below 1%. A lot of other people calling for higher rates, but Credit Suisse certainly going the other way. I wanted to point one point out in Mr. Sauce's lengthy notes over the weekend, and that is this idea of the jobs report. Now, that'll be up Friday, and Neil Sauce, among others, showing that this is going to be a very different report with annual benchmark revisions. He calls it a once-a-year re-anchoring, and the big change will be in the establishment survey. That's the idea here of non-farm payrolls, measuring employees. This will be all employees now instead of what we've seen before, which was production and non-supervisory workers. So not only do we have to try to game jobs on Friday, but we have to do it within statistical changes by BLS. Ken Pruitt and I will try to bring to that as best as we can at 8:30 Friday morning. Finally, Deutsche Bank, Joe Livornia. This is not Peter Hooper and Thomas Mayer's work. This is Joe Livornia, their chief fixed income economist. He likes what he sees for the fourth quarter of this year. One of the reasons he's optimistic, companies have the means to support an investment-led recovery. The corporate cash, less business fixed investment is just remarkable. It's absolutely historic going back to 1968. Corporations, I guess this phrase works, up to their eyeballs in cash. Joe Livornia looking for higher yields, 4.5% out to the end of the quarter of this year. Too much research to talk about. We hope you've enjoyed this. We hope you get value out of it. Premium content. It's our weekly research review here at Tom Keene On Demand. Thanks for your support.
This has been a bonus premium podcast. Tom Keene On Demand. Copyright 2010.